Welcome back, everyone. I'm Lead Trainer with Stock Trade Tim Bohen. Today we're going to be talking about gauging market sentiment, okay? And when we think of that, we kind of think of like whether the market is bullish or bearish. And the reason we care about that is kind of deciding really at the end of the day how aggressive we're going to be, whether it be on the long or the short side. And most of you, I'm going to guess, are probably skewed towards going long. You're probably new traders and you're not necessarily ready to short sell a lot. And the reason we care about market sentiment, and for the rest of the video, I'll kind of skew towards thinking about, going long stocks, buying stocks with the anticipation that they will go up for profits or lower for losses. We have a ton of videos on short selling. You can check them out if you're more curious. But again, as a new trader, I would tell you lean towards going long. You don't have all the hassles of shorting with locating shares and fees and a lot of that stuff. And I love shorting. I was actually predominantly a short seller for over a decade, but I don't consider it a newbie strategy. What I would like to see is you guys get some progress, grow your account, get some confidence on the long side, nail that down, really bulletproof your process, then look at flipping short. I think a lot of people try and flip too short too soon. They don't have the risk management, they don't have their trade plans worked out, and they get twisted up real fast. So that being said, what we're looking for is really that indicator is like, is this a day that I'm really gonna put the pedal to the metal? Am I really gonna really look to get aggressive, both in my entries and my position sizing? Or is this a day that, hey, maybe I'm gonna dial back, trade less, trade smaller? And it's really important because if you don't know how to gauge that, I see a lot of people, I mentor a lot of traders, I'm in a lot of chat rooms, Twitter, I talk to these people and stuff, and and it'll just be a really slow day, like not much going on, and I'll get these frustrated messages that like, oh, I lost on 5 different trades. And listen, I've been doing this for 18 years, but I'll be like, listen, you're getting really aggressive on a day when there's just not much out there. Like, this isn't a day to be trading 5 times a day, okay? Maybe test the waters if you see a good setup, but if you get stopped, then read the room and realize that, okay, I took my shot, I had a small loss, I'm gonna wrap it up and I'm gonna come back when the market turns, instead of what happens with so many new traders is they revenge trade. They're frustrated that they lost $100 and they start pressing on a day when the opportunities just aren't there. Now, something maybe you've heard me say, I always say every trading day, like even I do that pre-market webinar every day at 8:30 Eastern. It's called Pre-Market Prep, where I get all the traders in my group ready for the day. And sometimes on those webinars, I kind of end and I'm like, listen, guys, there will be one. I always say the same thing. I'm like if we run all the scans and we go through the process and nothing is like screaming at me, I always end the same way. I'm like, there will be one, but I'm not seeing it right now. And what I'm telling people is that that's a good day to kind of dial back and not get crazy aggressive. Or if one does pop up, go ahead and trade it. But if you get stopped, then you call it a day. You don't press on slower days. Now, there are days to press, okay? There's a lot of them, especially right now. I mean, the market is so hot right now. I look at some of these moves just like constantly. We got penny stocks running. We got mid-price stocks running. You look at NVIDIA going up 30% on earnings after it already went from 200 to 1,000. The market's hot right now, but you need to identify the signs on when to get aggressive and when to dial back. So pre-market prep is a great way to do that. I'll talk about that here in a second. But also just something that I do and teach, okay? Nothing that I recommend in any of these videos is something that I don't do. I do all of this stuff. I tell everyone, and this is always kind of unpopular, like, don't follow sports, okay? Don't follow celebrity culture. Like you think of all, of social media, like you think of all of these things that gobble up your time day in and day out, and they don't get you closer to the goal of making money, okay? So I'm not saying you can never watch a baseball game, but if you're sitting there and you're reading these sports websites or you're going to watching some reality show or something, use that time to get yourself in tune with the markets. And I don't watch any mainstream media. I don't watch any sports. I gave it up a decade ago because I'm obsessed with trading. So what I want you doing is Some of my favorite sources, Wall Street Journal. Just read the Wall Street Journal every day. You'll know how hot the market is. You'll know what trends are. One I absolutely love is Barron's. I still get the physical copy of Barron's on the weekend. Absolutely love it. And then Bloomberg Business Week, the online edition. And then also the Financial Times and Investors Business Daily. Okay? Wall Street Journal, Barron's, Investors Business Daily, Financial Times, and Bloomberg Business Week. Now, I get it. You're like, oh, I got to subscribe to all these. I'm not saying you have to, okay? All of those subscription together are probably $250 a month. But to me, that's an investment in my business. That's an investment in my trading. I am willing to spend that. Now, if you're brand new and you're just getting started, take advantage of the free sites, okay? They'll usually give you a few views. You can read a little bit. But to me, that money that I spend, and it might be more than $250, is a good investment so that I know what's moving markets, the direction of the markets, what is hot out there, etc. Now, if you don't want to do all that reading, which I don't know why you wouldn't want to. Remember, Warren Buffett reads 300 pages a day, okay? I'm not saying reading 300 pages a day will get you to Warren Buffett's level, but that's one thing he has done for literally decades. He does similar to what I did. I'm not saying I'm Warren Buffett, okay? But like, he constantly is reading 300 pages a day of financial data and articles, and there's a reason he's Warren Buffett. He ain't watching Real Housewives, okay? But anyway, if you can't do that, look at the market indexes, okay? They're gonna give you a trend. If you look at the S&P, the Dow, the NASDAQ, the QQQs, watch crypto prices, etc. when cryptos are running, but even just having an idea of what the overall index is doing. And if you come in tomorrow morning and you're looking to make trades on the long side, and the S&P and the NASDAQ and the Dow are all gapping down and Bitcoin's washing out, that's a very simple indicator that, hey, today's not a day to get aggressive. Vice versa, if you come in tomorrow, Dow's popping off, Tesla's popping off, NASDAQ's popping off, Bitcoin's ripping. That's a very simple indicator, and you do that all on your iPhone. Okay, you can check all of those prices on your iPhone stocks app. You don't need anything special. That tells you that the market's frothy, that there's buyers out there, there's emotion out there, there's animal spirits out there. So that's a good indication of knowing that this is a day that I'm gonna press. Like I told that story a few minutes ago. This guy was frustrated. He traded 5 times and every one of the indexes was down. Even the cryptos were down. And I'm like, and I'm looking at my scans and I'm like, the biggest runner today was like 20%. I'm like, you just need to recognize that there's times when the market's hot and there's times when the market's slow. And he was all frustrated. I'm like, listen, I told you all of these things, but you chose to ignore them. You chose to get really aggressive on a slow day. He's like, oh, I got the day off. I'm like, well, great. You lost even more money. Like, you would have been better off not trading. So one of the great trading quotes in these situations, maybe you've heard this one, is it's not the money you make, it's the money you keep. So by reading market sentiment, knowing what's the hot trend, what's going on in the market, you can keep your money. You don't get aggressive on slow days, and you do get aggressive on hot days. And last point I'll make, guys, get obsessed, okay? The most successful traders, I've been in this 18 years. I've met thousands of very successful traders. I've interviewed them on the podcast. They're my friends. There's one common factor to the most successful traders is they all barely care about anything but trading. Now, if that's not for you, you can still make good money trading part-time. I did it for 6 or 7 years. But if you really want to take it to the next level, take it seriously, get obsessed. And if you really want to take it seriously, check out the Daily Income Trader System below. When you click that link, it'll take you to a free webinar where we tour everything that I just talked about in this video. How we read market sentiment, how we look for hot sectors, how we use scans to identify the best setups, and then chart out stocks using technical analysis. So if you want to get obsessed and you want to take it to the next level, click that link to the Daily Income Trader System. We run them live all day long, even nights and weekends. Pick a time that works for you, check it out, and we'll see you there.